Hello and welcome to the Forma Model's Beta Estimator financial model.
This model was developed to utilize historic security and benchmark returns to analyze Jensen's alpha, beta, and proportion of risk attributable to market for a public security utilizing a reference benchmark. This model is a useful tool to equity researchers, portfolio managers, and corporate finance professionals. The README tab states the model purpose, highlights common use cases, and provides an overview of functionality, formatting, and all of the unique modules within the model. This tab also provides additional documentation, contact information, and a summary of additional products and services available from Forma models to support your analysis needs. The top of the Forma tab contains the model output calculations. These cells will calculate and display the result as you populate the required assumptions and historical data. The pricing output box provides the year 1 through 5 forecasted security price based on your input assumptions and historic data utilized. The risk and return output box provides the calculated intercept and slope for the regression. The last output box provides risk and return information for the security being analyzed, including various variance metrics as well as the R-squared of the analysis.
The first assumption input is for the current risk-free rate. The current 10-year Treasury bill rate is commonly utilized.
The second assumption input is for the historic risk-free rate over the backward-looking analysis period being utilized in the model. You can get this rate by calculating the average historic 10-year Treasury bill rate during the backward-looking analysis period, as an example. Next, the market risk premium for the security is input. The market risk premium can be calculated as the difference in the return of the benchmark index and the risk-free rate. The current stock price input is for the price of the security on the day you complete your analysis. The current annual dividend is the trailing 12-month dividend per share paid by the company you are analyzing the stock of. The periods to analyze input is the number of months of historical data you will input to calculate your output. There are 4 pieces of periodic monthly data that need to be input in the model to complete the various calculations and generate the output.
The first piece of historic information is the stock price. Depending on the measure you are using per period, this could be the annual, monthly, or daily price. This is up to you for your analysis. The second piece of historic information needed is the periodic dividend per share paid from the company to investors. The split factor input is utilized to common size the data if a split occurred throughout the historic data period. If a split did not occur, use 1 as the input. The index price is the price of the benchmark index you are utilizing for the applicable historic period. Please remember to utilize the same price measurement period, for example daily, monthly, or annual, for the index price as you do for the stock price input. With all of the assumption and historic data input, the top of the model will present the output we reviewed at the beginning of this video walkthrough. Thank you for tuning in.
We hope you enjoyed this Forma models walkthrough and encourage you to visit our website to try the model for yourself.